everyone, and welcome to UBS Trending. I'm Anthony Pastore. This week, UBS released the results of our May 2022 Investor Sentiment Research Survey. It's a global survey of 3,700 high net worth investors and business owners. And here to discuss the findings with me are Tom Naradle and Nadia Lovell. Tom and Nadia, so nice to have you joining us here for this special edition of UBS Trending. And it's always exciting for me to hear more about what investors, both globally and here in the U.S., are thinking and doing in the current environment. So, Tom, I would love to start with you. Obviously, this is a report that I know you're really keen on discussing. We get you here every quarter, and we can't really talk about this particular quarter without talking about all of the uncertainty. I think certainly a lot has changed since the last investor sentiment survey came out just 3 months ago. So we see now that investors are holding pretty steady, but what's worrying them right now, and do you think that their concerns are justified?
So Anthony, great to be here with you and Nadia to talk about our investor sentiment research. So first, it's a really uncertain time now. Certainly, it's a very, very awful situation in terms of what's going on with the war in Ukraine and the humanitarian crisis there. And it's certainly we certainly have our thoughts and our prayers and our support with the people of Ukraine. Now, as a result of that, as a result of inflation. Surprisingly, from a purely economic standpoint, investors are actually holding pretty steady with their optimism, but they are very concerned about inflation. 9 in 10 think the Russian invasion of Ukraine is going to push inflation pressures even higher than what we've seen before. Now, investors are hanging tight. They're sticking with their existing allocations. They're sticking with their existing levels of cash. They are interested in using weakness in the markets, in equity markets in particular, as a way to increase their allocations, either to the markets more broadly or specific sectors. Nearly a third would think about buying on dips, and about a third again would also look at maybe doing some sectoral shifts in that opportunity to purchase. And despite all the concerns about inflation, we don't think a recession is on the horizon. Why is that? We do see inflation in upcoming months and quarters beginning to roll over. That the high rates of change that we've seen over the course of the past couple quarters will start to lessen over time. There are a number of reasons for that. Substitution effects that you see in the economy on a normal basis. Some of the higher moving items that had been pressured by the pandemic, for example, or supply chain shortages. Some of those distortions are starting to ease. We also think that the war's impact on inflation will also begin to lessen as we make our way through the remainder of the year. So all in all, I think investors are being quite rational, aware of the risks, but also making the right decision to stay the course.
Terrific, Tom. Thank you. So Nadia, I'd love to talk with you and maybe focus on the opportunities that could be out there for investors. So how should they be positioning themselves amidst this backdrop of what we're talking about here with Tom? We've got the war in Ukraine, continued inflation, and of course this ongoing volatility. So what are your thoughts there for investors as they consider their own portfolios?
Yes, well, Anthony, as Tom said, from an economic standpoint, inflation and volatility certainly have people worried, and that's understandable. Investors are seeing higher prices in their everyday lives, from the gas pump to the supermarket. And they're worried about the actions that the Federal Reserve in the US and central banks globally might take in an effort to regain price stability. In the US, we are expecting a faster pace of rate hikes than in price cycles. The Fed actually just did a 50 basis points hike, the largest increase in 20 years, and did telegraph the likelihood of another 50 basis points increase in each of the next 2 FOMC meetings. But I will say, in my recent conversations with clients, investors are saying that one of the best ways to really combat high inflation is to own stocks. It's not by sitting in cash, which is why we found that many investors are actually thinking about increasing stock holdings during this current volatility. But that said, how should investors really position to manage risk? Well, we think that investors should build up portfolio hedges to mitigate risk factors from the war and inflation. Broad commodities have done well historically during periods of high inflation, and also they serve as an effective geopolitical hedge. Energy equities and the US dollar can also help investors stay in the market while reducing their exposure to volatility. And when you think about it, to prepare for higher rates, investors could look towards value stocks. They tend to outperform during these periods. And I would also highlight, Anthony, investors could diversify with alternative investments.
Terrific, Nadia, thank you. So, Tom, I know that one of the most important aspects for you is also looking at the business owner part of the survey. And it's interesting when you look at the difference between personal investors and business owners, business owner optimism actually declined for the first time in a few quarters. And in addition, their hiring and their investment plans have certainly moderated since the last survey. So maybe you could tell us a little bit more about how business owners are coping right now with all of this uncertainty.
So Anthony, let's take a look at what business owners are facing here. They're certainly feeling the pressures of inflation, whether it's the cost of materials for them on the input side, whether it's the cost of labor to attract talent. They certainly are feeling the inflationary pressures. They're concerned about the possibility of taxes on small business also increasing in the future. But look, if you're an entrepreneur, you've got to be an eternal optimist, especially about your own business. And 67% of them are still optimistic about their business, despite the concerns about inflation and labor and business taxes. They're also in, I would say, a very balanced mode. About half of them expect to keep their workforce the same. They're evenly balanced between the investments that they're going to make in their business. So overall, it's really a question of they're optimistic, they're being thoughtful about the way they're deploying their resources, but where are they thinking about that deployment? Not surprisingly, it's in people, so people, talent, and technology. 37% are looking to invest in more benefits and more compensation for their employees. And 35% are thinking about how can we put more into our technology platforms, into AI, data, and analytics. So what I would say I think we could take from this is there's optimism, there's good investment going on by the business owners. This could be a transformational period for a lot of small and medium enterprises in terms of them both upgrading talent, upgrading technology, and us seeing a lot of innovation in their business models.
Right. Clearly, there's a reason why the title of this particular investor sentiment for May is called Wait and See. I think that's what we're all doing, as there are so many unknowns and so much uncertainty. So it is good to get a sense of what high net worth investors, both business owners and personal investors, are thinking here, to get a finger on the pulse of what's going on out there and how we should be thinking about the markets and the way forward. So Tom and Nadia, always a pleasure. Thank you both so much for sitting with us today, sharing your insights, and looking at the really important data in the report. Good to see both of you.
Great to see you, Anthony.
You too, Tom. Thanks, Nadia. And if you would like access to this report to glean all of the data that we pulled from this particular survey, you can visit the website at ubs.com/investor-sentiment. And make sure to follow UBS on social media. We'll have a lot more content on the latest investor sentiment surveys on Facebook, LinkedIn, Instagram, and Twitter. Plus, you can take a look at our past UBS Trending episodes on demand. And as always, if you do have any questions about your portfolio or how to position it within the context of what's going on in the markets, make sure to reach out to your financial advisor. Until next time, I'm Anthony Pastore. We hope you have a great day. And remember to keep your eyes on what's trending. See you soon, everyone.